The new gold rush, the price of gold reaching heights it has never seen.
Gold has just hit its highest price ever, surging beyond $5,000 per ounce for the first time. Gold is often seen by investors as a refuge in times of market uncertainty.
Let's just start on gold. Remarkable run. Just to remind viewers, Ben, so we break 4,000 in October. Then just over 100 days later, you smash 5,000. How do we make sense of this run, Ben? How do you explain it? And do we continue to move higher in 2026?
How to make sense of gold hitting over $5,000 per ounce in 2026, and is it still going to rally more? Well, the question you should be asking is that what asset is highly correlated with gold and is still trading at a discount? So I'm going to tell you which asset is fundamentally and technically correlated with gold and something you should definitely be looking at for your portfolio. If you don't want to miss this next gold rush, stay tuned. As we've seen, gold has been on a tear literally over the past year. It's gone up from $2,700 per ounce to over $5,300 per ounce. The reasons are multiple. One being inflation. You had Trump announce that he was increasing the military defense budget to $1.5 trillion from $1 trillion, a 50% increase in 1 year. Where is that money going to come from? The US debt is already close to $40 trillion, so that money is going to be printed. Next, you have a potential military attack in the Middle East. If that happens, that will definitely disrupt oil prices, leading to higher inflation. Also, you have the Fed. As we talked in my previous video, one of the biggest massive crypto catalysts for 2026 is going to be that in May 2026, the Fed chair, Jerome Powell, term ends and Trump can nominate a new person. That person is definitely going to be aggressively looking to cut rates, which is going to lead to higher inflation as well. In conclusion, everything points to a weakening dollar, and investors see that. That's why you've seen everybody, not only from investors, but the central banks, dump the dollar and move to hard assets like gold and silver. But why gold? So gold has some key properties that make it unique and a really good hedge against inflation. Number one, scarcity. It has a limited supply. It's finite. You can't create more gold. Second is this long-term store of value. People can hold it for hundreds or thousands of years. Gold is indestructible. It doesn't rot away like metal or wood. Lastly, it's liquid and accepted worldwide. It's being used as a medium of exchange for value and goods for thousands of years. But there's another asset that fits all those characteristics of gold, but that I would argue is actually better, and that's Bitcoin. Scarcity. Over 95% of Bitcoin is issued. This also makes it a good long-term store of value like gold. It's liquid as well. It's traded all around the world. It's decentralized. No one controls the supply, and pretty much everybody can access it. So these fit all the properties of gold, but actually has other properties that make it more accessible to everyone. Now, the second part I'm going to mention about Bitcoin and gold is from a technical standpoint, and this deals with something called the up capture ratio. And you can see on the table I have in front of you from 2016 to 2025, the calendar year returns for both Bitcoin and gold. Looking at the years that circle green over the past 10 years is that when gold had a positive return, Bitcoin outperformed immensely, except in 2025. That year, gold actually returned 48%, but Bitcoin was down negative 6%. To me, what that means is that if Bitcoin performs historically while also having the same fundamental properties, it should be due for a nice return in 2026. So what's the angle? Gold is a great asset as well as silver. And while you may have missed the gold and silver rush, do not miss the crypto gold rush. History shows that when gold has performed positively, Bitcoin typically outperforms. What do you think? Let me know in the comments below. And if you enjoyed this video, subscribe, turn on the notifications, and I'll see you next time.